Joining us now for thoughts on the macro outlook and the investment strategy, Wei Li, Global Chief Investment Strategist at Blackrock, on set with us this morning. Wei Li, very nice to have you with us. So we were just hearing there the latest thoughts from the Fed, but the broad theme seems to have been, this disconnect between what the market is expecting. The market expects a lot, and the Fed has never promised to deliver quite that number of rate cuts that the market has been expecting. How do you look ahead to the year and see this settling down?
Yes, indeed, there was a big gap between what the Fed said they were going to do versus market pricing, and that gap started closing in recent trading sessions. We always thought that the Fed was not going to deliver as many cuts as markets were hoping for, and also as early as markets were hoping for. But now the pricing is moving closer to our expectation, but for different reasons. So it's moving closer because of this emphasis around how hard it is to get the last mile of inflation down. We actually think that it's not that hard to bring inflation down to target because goods deflation is already running above 2% annualized. So we could see inflation at target by the end of this year in the US, and sooner than that, maybe at mid-year point in Europe. So it's not that hard to get inflation down to target, but it's very hard to keep inflation at target. So that means two things. First is that given the emphasis around the last mile of bringing inflation down, the Fed could be positively surprised by how quickly inflation actually in the near term could fall. And that means that the immaculate disinflation narrative has more room to go. And the second thing that this implies is that further down the line, markets is going to wake up to the fact that we're still in a structurally higher inflation environment, a structurally higher rate environment, and that then warrants a bit of a reset in terms of risk sentiment.
So does that leave us alert to another risk then, which would be that the Fed jumps on that drop in inflation, cuts, and then inflation ticks up?
Yes, indeed. But markets can only focus on one thing at a time, and the Fed focus on one thing at a time as well. So right now, I think the main focus will be around how quickly goods deflation is bringing inflation down, and that could support sentiment for the time being. Until then, the focus shifts to the new regime of higher inflation, and then that warrants a reset. And also further supporting sentiment for now is also the broadly still positive momentum on the earnings front. Yes, we do have quite a bit of dispersion across sectors, but more broadly speaking, we're seeing reasonably strong earnings momentum coming out of the earnings recession last year.